Compass is suing Zillow, and if the lawsuit succeeds, it could transform how and where real estate listings are shared online. Compass claims Zillow engages in anti-competitive practices to dominate digital home listings. Zillow says it has the consumer in mind when it lists properties, and it accuses Compass of trying to hoard listings. But Compass points to a new rule from Zillow that states any home listing publicly marketed to consumers anywhere must be published on Zillow within 1 day. Compass claims that limits home sellers who try to sell their property outside Zillow, but Zillow says the policy is in response to sales tactics that limit visibility. The first executive has been convicted for abusing an insider trading rule, which was established to protect from that very crime. Former OnTrack CEO Terence Scott Pizer has been sentenced to 42 months in prison for abusing a rule on so-called 10b5-1 trading plans. This sets predetermined times for insiders to sell shares so they aren't accused of selling due to negative news. Prosecutors say Pizer sold shares before news dropped of OnTrack losing a big client. Pizer's lawyer says he plans to appeal. And faster Amazon deliveries arriving soon in smaller cities and rural communities. The e-commerce giant expects to bring same-day and next-day deliveries to tens of millions of customers in smaller towns by the end of next year. This will be for items categorized as everyday essentials. This includes groceries, beauty products, and pet food. Amazon said it invested $4 billion on new facilities and drivers for the delivery expansion. Now, depending on where you live or are looking to live, you may have the upper hand in the housing market right now. Buyers may want to head south or west, while owners in the northeast may want to list. Here's more.
Parts of the country are flipping to be more buyer-friendly, while sellers are holding the advantage in others. The housing market is seeing its widest gap of buyers and sellers on record. Axios is reporting nearly 500,000 more sellers right now. This has parts of the country turning increasingly buyer-friendly, particularly in the South and the West. Two key indicators are more listings and price cuts. That's why Realtor.com data from last month ranked Phoenix at the top. 1/3 of the listings prices in the city were slashed, and new listings ticked up nearly 4% year over year. The typical home there costs about $525,000. Tampa ranked second, and Denver rounded out the top three. Inventory in all three cities skyrocketed from a pandemic-era construction boom, but demand remains dampened by high mortgage rates and economic uncertainty. Not following the housing trend is the Northeast, where housing supply is low and cost of living is high. Data from Redfin shows in mid-spring there were more buyers than sellers in Boston, Massachusetts, Providence, Rhode Island, and Brunswick, New Jersey.
President Trump says China can continue to purchase oil from Iran. It comes after the U.S. bombed Iran's nuclear facilities. He said he also hopes that China buys plenty of oil from the United States. Trump's post came after he announced that Iran and Israel had agreed to a ceasefire. Earlier this year, Trump had said he was reimposing maximum pressure on Iran over its nuclear program and funding of terrorist groups across the Middle East. He imposed waves of Iran-related sanctions, including on several of China's so-called independent teapot refineries and port terminals operators for purchases of Iranian oil. Actual lifting of sanctions on Iranian oil will take actions by the Treasury and State Departments along with Congress, but the Trump administration could choose to not enforce existing sanctions, which could increase the flow of oil to global markets. The 4th of July holiday is approaching, and the Transportation Security Administration is forecasting a busy travel period. The TSA expects over 18.5 million people to travel by air from July 1st through July 7th. The highest passenger volume is expected on Sunday, July 6th, with approximately 2.9 million passengers. If traveling with children 12 and under, the TSA says it has practices in place to expedite screening. Kids can accompany a TSA pre-check enrolled parent in pre-check lines. The summer is already off to a busy start. This past Sunday, June 22nd, was the busiest single day in the agency's history. The TSA screened nearly 3.1 million travelers. And they only hit public roads on Sunday, but Tesla's Robotaxis already face a probe over alleged traffic violations. A small fleet of the vehicles has started operating in Austin, Texas. Here's more.
They're offering rides within a limited zone inside the city. But the US National Highway Traffic Safety Administration says it is seeking information on the operation. Watchdogs say they have reviewed online videos purporting to show one robotaxi speeding and another using the wrong lane. But boss Elon Musk has said the company will be super paranoid about safety. The robotaxis are avoiding bad weather and difficult intersections and won't carry any children.
Ford is accelerating its campaign to preserve Biden-era EV tax credits. The car maker welcomed reporters to its $3 billion battery plant in Michigan, which is still under construction. This comes ahead of the Senate vote on a reconciliation bill that could wipe out EV incentives under the Inflation Reduction Act. Ford warned that jobs could be at risk if tax credits are pared back. The facility is expected to employ about 1,700 people when it starts production next year. Plus, Ford argues it's reshoring important manufacturing expertise long lost to China. The company is even licensing technology from China's leading battery producer to make its batteries. 5 people were taken to the hospital after an American Airlines flight experienced unexpected turbulence. The Federal Aviation Administration says the Airbus is a 321 from Miami, landed safely in Raleigh-Durham, North Carolina on Sunday night. One passenger says the incident was quick and unexpected, happening just after the crew began cabin service. American Airlines said 3 flight attendants and 2 customers were taken to a hospital for evaluation. They have all been released. The Federal Aviation Administration is investigating. And a professor warns that gas prices in California could hit as much as $8 a gallon. He says the planned shutdown of 2 oil refineries could be the cause. NTD's David Lam reports.
A professor warns that gas prices could potentially reach between $7.30 and $8.40 per gallon in California. A recent report by University of Southern California professor Michael Miche says prices could reach that level by the end of 2026 if 2 refineries shut down. Last October, Phillips 66 announced plans to shut down its refinery in the Los Angeles area in late 2025. Similarly, in April this year, Valero said it intends to idle, restructure, or cease refining operations at a refinery in Benicia by April 2026. Nearly 300,000 barrels per day, about 20% of the state's usage, would be eliminated.
All the time is like the price of gasoline is the prices all the time is like hiding, but people are still survive.
Valero says it's due to years of regulatory pressure and significant fines for air quality violations, including an $82 million penalty in 2024. Phillips 66 cited similar challenges. Lawmaker Mike Gibson believes California should do what it can to ensure that other refineries remain in the state. He said, "They have said that they cannot do business in the state of California. The regulatory agencies have imposed on the refiners of California very stringent regulation that makes it very difficult for them to remain in the state of California."
One party, multiple parties, I don't know. Whoever isn't willing to budge. But as citizens, we are feeling the pitfalls of their infighting. Figure it out so that we can feel some relief.
Both Valero and Phillips 66 said they will work with employees and the community to provide help and support during the transition period. David Lam, NTD News, California.
Oil prices have hit their lowest level in 2 weeks after the Israel and Iran ceasefire announcement. This comes as worries of supply disruptions in the Middle East have eased. Brent crude futures were down almost $4 or about 5% to under $68 a barrel. West Texas Intermediate crude also fell over 5% a barrel to under $65. Brent was on track to its lowest settlement since June 10th. Meanwhile, West Texas Intermediate was on its way to its lowest since June 6th. On Monday, both dipped more than 7% after rallying to 5 month highs following U.S. strikes on Iran's nuclear facilities. And joining us now to discuss about this is David Blackman, energy policy analyst and consultant. He's a 40-year veteran of the oil and gas industry. David, thank you so much for joining us today. What is the trajectory of oil prices right now in light of the Israel-Iran conflict, and how does the situation look to you?
Well, I mean, we're back, frankly, even below where prices sat prior to the conflict beginning on June 12th. So I think we're 6% below that level, right? About 64.50 right now as we're talking. I expect them to go still lower here in the coming few days. I think they'll settle around $62, $63 and probably remain pretty steady there. The outcome of the conflict between Israel and Iran has significantly reduced tensions, not just in the Middle East, but globally. And, when you take tension out of the global trading system for crude oil prices, they tend to settle lower. Given that and the fact that the market's significantly oversupplied right now, there's nowhere for prices to go at this point but down.
Okay, David, I'm sure you agree with me when I say there's probably a lot of uncertainty up ahead. So, I mean, what is the best and worst case scenario in your mind? And in the worst case scenario, how much would prices be?
You talking about going higher, you mean? If they should go higher,
Right.
what's the worst case?
Yes.
The only thing that can make them go higher, so yes, I agree with you. There are a lot of uncertainties ahead. But when you're talking about crude oil prices, there's only two big factors that could really spike the prices related to the Middle East. One would be for the Strait of Hormuz to be shut down. That's the major choke point for 20% of all crude oil exports flow through that strait every day. And then the other would be should the conflict restart with Israel targeting Iran's refining or export facilities, which would take most or all of Iran's crude oil off the market, which is almost 2 million barrels a day. As long as neither of those events happen, and that's what traders have been looking at over the last 2 weeks, the potential for one of those two events to happen. As long as neither one of those happens, there's really the Middle East is not going to really put any kind of upwards pressure on prices. Now, there are other events globally that could happen that could do that, but the Middle East right now is, again, as long as those two events don't happen, it's really stable and kind of a non-factor.
Okay, so those two scenarios that you just described, in your view, what are the chances of them actually happening?
I would say they're pretty non-existent at the moment. Now, that depends, of course, on Israel and Iran maintaining the ceasefire. And I think it's fairly evident looking at what President Trump had to say today and indications coming from Israel that really Benjamin Netanyahu, the prime minister of Israel, and the IDF had additional targets they wanted to hit, military targets in Iran to take them offline. And so there is question about whether or not that ceasefire is going to hold. But as long as this current status quo remains, I'd say the chances are pretty much non-existent.
Okay, so oil surged as high as $81 a barrel. I just want to know, David, what would a sustained return to that level mean for consumers and businesses?
Well, of course, it would spike gasoline prices. We're fortunate that oil prices only got up to 81 very temporarily, and so that those costs, that higher price, didn't flow through to gas prices at the pump. But if prices were to move that much higher, that would be almost a 30% increase. You'd probably be looking at somewhere in the vicinity of $3.80 to $4 a gallon for regular, which right now is right around $3. So almost $1 a gallon additional cost for gas consumers. And the thing is about higher gasoline and diesel prices, All of our consumer goods in the United States and really most countries are transported by trains, big trucks, or ships that run on diesel fuel. So higher fuel prices, end up becoming higher food prices at the supermarket, higher clothing prices, and all other consumer goods.
So, in terms of oil prices either stabilizing or continue to fluctuate, which way are you leaning towards more?
My outlook right now, currently, is they're going to remain pretty stable and they're going to remain pretty low. That's going to mean less drilling here in the United States, less domestic oil production, and probably we'll have an increase in our own oil imports in the months to come. But overall, that's also a very positive sign for the health of the economy. It will keep inflation low and prices low. And, people will have more money in their pockets for other things.
How sensitive do you say the oil market is, the global oil market right now?
Right now, well, at this moment, uh, assuming no further war breaks out anywhere in the Middle East, tensions are very low. It's very stable. Traders right now are looking at one of the most stable situations they've had in a long time in the Middle East. Of course, we have the Ukraine conflict ongoing involving Russia, which is the third largest oil producer on earth. You have the Chinese economy in flux. No one knows really how strong it is performing currently or how strong it's going to perform the rest of the year, and that has a big impact on global oil demand. And so there is, as you said earlier, a lot of uncertainty globally, just in terms of the oil markets, it's a pretty stable situation at the moment.
Okay, I'll just give you one more question here. What are your thoughts? Can you describe the situation in terms of the supply and demand when it comes to oil right now? Trump mentioned that China is now free to buy oil from Iran.
Yes, in fact, China gets a majority of its daily oil imports from Iran. Uh, right now, globally, the market as a whole is oversupplied right now. The demand has not increased as rapidly as it needed to keep up with supply here for a year and a half, and so we probably have a glut on the market of 1 to 2 million barrels of oil per day. That's not all a negative thing for crude markets or for countries like the United States. We have a real need to refill our strategic petroleum reserve here in the U.S. right now. So a glut on the market means the Department of Energy is able to start refilling the strategic petroleum reserve at lower prices, much more affordably, and so that's a positive thing. But yeah, overall, it's an oversupplied market, and there are some projections thinking that it may balance itself out towards the end of the year, but right now there's a lot of pressure for prices to go lower.
Well, all right, David, again, thank you very much for coming on. It's always great to talk to you.
Thank you.
A second Fed official is seconding President Trump's push for a rate cut. Fed Vice Chair for Supervision Michelle Bowman downplayed the potential impacts of tariffs. She said the central bank could swiftly lower rates to preserve the health of the labor market. Fed Governor Christopher Waller shared a similar opinion last week. At its latest policy meeting, the Fed kept its benchmark lending rate unchanged for a fourth consecutive time. Fed officials said they prefer a wait-and-see approach to how Trump's policy shifts impact the economy. Before making any cuts, that is, a strategy President Trump has openly criticized. He has blasted Fed Chair Jerome Powell for not lowering rates. Britain's competition regulator said it was proposing to designate Google with strategic market status. That means the regulator will get greater control over how the tech giant operates search services. Here's more.
The Competition and Markets Authority said the designation is the first proposed under the new big tech regime and would enable it to force Google to ensure fairer ranking for businesses appearing on Google search. It also proposed making it easier for users to access rival search services and control for publishers whose content appeared in search services. It added that Google should also make its data more portable to help new businesses bring innovative products to market. Google will be the first company designated since the regulator gained new powers this year, and it could be implemented in October. Google accounts for more than 90% of searches in Britain. The CMA says it set out a roadmap of future action against Google. Google said the move could have significant implications for businesses and consumers in Britain. The tech giant added that the scope of the CMA's considerations were broad and unfocused.
Parents, listen up. Target says it plans to hold prices at 2024 levels for many key back-to-school items this fall. The company made the announcement Monday for the upcoming school year. Its popular list of 20 must-have school supplies, adding up to a total of less than $20, will return. Target says shoppers will be able to find a wide variety of affordable products starting at $5, also returning the 20% off student and teacher discounts. The value of WNBA teams has grown rapidly based on statistics from Sportico. On average, team values have risen by around 180% in the past year, and TD Sean Marshall has more on this.
13 teams of the WNBA increased in value by an average of 180% since last year. This was a record for a major sports league, doubling the previous record for a year-over-year gain. According to research by Sportico, TV ratings, merchandise sales, attendance, and revenue increase over the last 12 months have led to the explosion in valuation for WNBA teams. Teams are collectively worth $3.5 billion, and on average, each franchise is worth $269 million, vastly more than the $96 million average value in 2024. The Golden State Valkyries, the newest WNBA team, is actually the most valuable of them all, despite making its debut just this season. It's valued at $500 million, according to Sportico. It's hard to compare that to the NBA's Los Angeles Lakers, which was just valued at a world record $10 billion and made $528 million in revenue in 2025. But Sportico expects the Valkyries to make more than $70 million in revenue in 2025, more than double what the WNBA team made in 2024. The second highest valued WNBA team is the defending champion New York Liberty. The team grew by 222% in valuation, the second largest gain over the last year, and is valued at $420 million. Sportico says it calculated its valuations through conversations with more than 30 people involved with the league, including bankers, lawyers, investors, consultants, team executives, and owners. The totals also include real estate assets tied to the franchise. Sean Marshall, NTD News.
All right, and just a quick market update. U.S. stocks rallied over 1% today, and it was buoyed by hopes of de-escalation in the Israel-Iran conflict. And this following a fragile ceasefire and comments from Fed Chair Jerome Powell as well, which suggesting patience on rate cuts. Now, the S&P 500 neared its record high, while crude prices fell, dragging energy stocks lower. Meanwhile, consumer confidence also declined. Airline stocks rose on easing geopolitical tensions, while defense stocks slipped. Tech and crypto shares gained, with Broadcom hitting a record high and Bitcoin lifting Coinbase and MicroStrategy. And that's it for today's Business Matters.